Good morning, everyone. Today is February 1st, Monday. I want to give you insight and also recap for last week of some major events in the market. Things have turned the other way around this last week. Dow closed lower Friday. This is the worst week since October after volatility and short sale concern create uncomfortable to the market. Using trade restrictions, several platforms promised retail traders to put a squeeze on short sellers once again. The impeachment of Trump is still underway. It's unlikely enough GOP senator will swing in the favor of conviction. The largest and hot topic for last week was the surge of shares due to short sale. GameStop Corporation, symbol GME, jumped 400 a week due to the lead and pack of short squeeze stock, including AMC Entertainment Holding, symbol AMC Express, symbol EXPR, BlackBerry Express BB, Nokia Corporation, symbol KOK, and Bed Bath & Beyond, symbol BBBY. American Airlines, symbol AAL stock has spiked also due to Reddit forum discussion. Shares of companies that have heavily short indicating that institutional investors betting they will fall have been scoped up on a number of global exchange. Stock in movie theater operator Cineworld and Publisher Press in London were also up 13% and 11% last week. India is forming a group who try to mimic what happened to U.S. stock exchange as well as in China. CBOE volatility index has gone up to over level 30. A new coronavirus variant first found in South Africa has now been detected in more than 30 countries, including the U.S. Another variant first found in Brazil has shown in Minnesota. Meanwhile, a team of investigators from the World Health Organization currently is in China, visiting labs, hospitals, and market to look into the origins of the pandemic. Biotech stock, however, went up due to Johnson & Johnson vaccine news. Cyclical stock, including financials and energy, at the board led the broader market slump, with the later getting hit from sluggish oil prices. Though Chinese manufacturing index was a little lower than expected, Hong Kong Hang Seng Index was up about 2%. Japan Nikkei Index was up about 1.3%. Shenzhen Composite was up also about 0.8% to 4940. A popular rebound from the Friday sell-off. And U.S. futures is all positive, with Dow up 190 points, which is about 0.64%. Nasdaq up over 100 points as well, and S&P about 30 points. A change in DC is the perfect time to make sure your investing and trading exposure line up with trend the government really drives. President Biden committed to taking the entire federal fleet green with electric vehicles or EVs. When there's actual money flowing into the economy with contracts signed, it should help to grow the economy, and expected for the S&P index of 23.7% growth reflect a macroeconomic view where the U.S. economy is expected to grow by 4%. This economic growth projection reflects how the economy has historically behaved in its current economic downturn. The stock market positive momentum is grounded in fundamental reality of the improving earning outlook and the favorable interest rate environment. We see no reason for this trend to stall or reverse aside that fundamental driver remain place. That's from the bank. How about from a technical perspective? China manufacturing activity weakened for a second consecutive month in January. It fell to 51.3 in January, down 0.6% point from December. It can be the catalyst impacting market today, Monday. And the last reclaim its 21-day line while the Dow and S&P 500 find support at the 50-day line. You can see the graph here that Nasdaq have been up, and the graphs January 26th of 13,626, which is the beginning of last week, and of course at the end of the week, it was up and down, but still end up higher than it was. And when the Nasdaq is more than 6% above its 50-day line, the risk of pullback are relatively high. So the more the Nasdaq get extended higher, the odds of pullback will be larger. Just to bear in mind. You should buy in confirm the market uptrends because unbalanced broader market, most stocks should trend up. Remember, even if the stock market widely regains all highs in the near future, that doesn't mean all leaders will follow. Software stock has slumped for a few weeks. Cyclicals reversed after the past couple of weeks. Cheap equipment names sold off hard in recent days, especially if they didn't sell last week. So analyze your current holding, what are your must hold and which are lower tile. You will want to take some more profit, cut loose in general reduce exposure as again. February typically is not a good month. I'm not a big fan of short selling, but just give you simple that may be the candidate or already shorting. NOK, BB, MSTR, TSM, KLAC. And just like I said, maybe Friday you were selling too much. So right now, in the Asian market, you see a rebound and you see the future positive. So I'm expecting, the U.S. will be up today, but it's based on as well of how the progress of the stimulus meeting going today. So you could flip if things not going well, but hopefully Biden were able to persuading the administration, the Congress, that really needed of the stimulus. Like I said, I'm still looking for jobs, and the market is still very sluggish. I mean, he seems to still really have a little more job out there, but I know the competition is very stiff out there, and the pay is really, really bad. If you really like my video, give me a like, and any comments or question, send me an email or get back to you as soon as possible. Have a wonderful, nice beginning of the week. Thank you.